Yo, what's up? Good evening. So this is a market review and trade breakdown for today's trade. And I'm going to show you everything in depth. All my thoughts, all the things on the chart and why price moved like it moved. So we had a bearish bias because the thing is we had buy side liquidity noted in yesterday's high, but also this sell side liquidity and the new day opening gap yesterday gapped below that and traded below that. And then we saw that the 1 minute CB, I mentioned that many times yesterday, we did not get above that. So there was no long narrative for this. And we see it rejected there with the bodies and then fall off. And then we had this day. So this is the new day opening gap, it gapped lower. And then we left the sell side liquidity down here. And this move went up into new week opening gap low and into this new day opening gap. And that's the reason why we have a narrative for short opportunities. And with the sell side liquidity down here, it's really high probability. If we had no sell side liquidity down here and this right low would have been lower than the left low, then this wouldn't be high probability, because this then would have been a high resistance liquidity one. But in this case, the lows are too smooth. This is high probability, and this is why you can trust the idea of going short instead of going long, even though you had a bullish bias the day before. But the fact that we gapped lower into the sell side and we left another sell side liquidity pool, ran some highs into premium arrays, that gives you a narrative and an idea about trading lower into the sell side liquidity and not only into this fair value gap. So that is the idea behind the narrative and the bias for today. And that's only an intraday bias. And the fact that we did run out the Asia high, I'm going to show you the charts in a minute. But the fact that we did run out the highs in London Open, that was really, really nice to see. And then we can also apply some New York Open, London Close concepts into this. Not only the macros, AM session, PM session, but also the typical kill zones from ICT. So everything basically was just textbook today. Everything was to the script, and the opening range gap as well, that was more than 120 handles, and I'm going to show you what I mentioned about that. So we had the lows here, and price moved towards that. There was no good entry in 8:30, so we waited for 9:30, and then we had this where the Asia here, the highs and the lows. Asia, so basically NQ did trade into the Asia highs here in London Open session, and then dropped towards the sell side liquidity. And then I had my projections below that sell side liquidity because I want to have a target below that, not only the sell side liquidity, but also how far can it go. And we had the minus 2.5 and minus 3 deviation. That was also inside the new day opening gap from Thursday, previous Thursday, and a first presentation. I think this was also previous week, I think. So many things in here that lines up with the sell side liquidity pool. So that is a high probability short opportunity and short target. And then we had a huge opening range gap. So usually we want to see the 25% level should be respected, and then we want to see the price go towards basically the gap. So we gapped lower, so we want to see another move lower and leave the gap open, or use the 25% level. And then we had minor buy side liquidity up here, and price went into that here. And then I had a early short opportunity. I outlined it with this 1 minute CB here. So you could have, for example, shorted this or look for a short opportunity after we reject from that. And the buy side here, that would have been then a target for example, PM session, and or if we trade above this CB, then watch the buy side and then drop. The bias was bearish, so every move up is good for us because it takes out the liquidity that is resting above highs, and retail traders are going to be trapped in this, and then we have our opportunity to go short. So upside targets, I'm interested in sharp drop and then find short setups throughout the whole day. So if we, for example, AM session, we do trade above the buyer side and then have a sharp drop, that would have been perfect. If we take out the buy side here and then have a sharp drop from this SIBI, perfect. Go for short opportunities. If we go into the buy side, then have a sharp drop, then go back up into the buy side and then have another sharp drop, perfect. Then you have two scenarios of short opportunities, and I'm going to show you that in a chart. We then had the first presentation here, so everything below that can be used as a short opportunity, and we rejected from the 25% level and the SIBI, everything to script so far. And once below the first presentation, you can short towards the liquidity we had on the sell side liquidity. So this one, the inversion fair value gap that was used here, and now it's a reclaimed fair value gap coupled with the SIBI inside the macro. So this had a really good opportunity for short setups with this breaker. So this breaker here, really nice, and I outlined everything beforehand. And now 945 SIBI should hold. So that is this red box in here. And we had that perfectly. The bodies respected the lower half. And then we had a nice drop towards the sell side liquidity. Somehow we did not take out the lows. And I was short here. We did not take out the lows here. We just made then triple lows. And I told you that, let me see, yeah, here. These lows in here. And the buy side were resting here. So the lows, they're not safe. You can trust that, and if your bias is bearish and you want to see bearish prices, you can trust this as a draw on liquidity. It's either for the AM session, lunch hour, PM session, or in this case, we had news at 1:30 PM and no news in the AM session. We had 8:30 news pre-market session. AM session, we had no news, so it's basically setting up the liquidity for PM session 1:30 PM. And I told you that, let's see, yeah, here they are not safe, they can't be, right? Because liquidity is there to be taken for smart money. And if you trust that, then you can be very confident about that. And if you have a short and it turns right above the sell side liquidity, that's totally fine. You can find even more setups in the PM session and or in the news at 1:30 PM. And I said 1:30 PM power speaks. It could hold the liquidity until then. And it was like that, just perfectly like that. So this was not random. This was not hindsight. It's basically to the script where price is operating through time and nothing else. Basically time and price. There's nothing random. And I had this 10:05 AM inversion fair value gap. This did not hold, so we went below that, but then went back up again. And then that was my last premium array on the 5-minute. And after that, once we are above that, it's really likely that we trade up into the buy side. And once we are inside the buy side, we want to see another sharp drop lower, right? So the sell side still open, still a target for today, either the lunch hour PM session and or post PM session. But the fact that basically we had 1:30 PM news, it's really likely that we trade into that sell side liquidity in the 1:30 PM news or right after it, right? Because the news, they are there for trading as a manipulation, and especially if we have buy side and sell side liquidity open. And for example, always think like, what is price doing right now? Like, okay, for example, we have in this 10:30, right? And you ask yourself, okay, we have 1:30 PM news. If price goes to the upside and takes out the buy side liquidity prior to the news, well, then why should it go higher, right? Because it took out the buy side liquidity and 1:30 p.m. is ahead of us and it's dropping, then the only thing would be trade into the sell side liquidity. Nothing else would make sense as a smart money trader, because you are trading to take out liquidity, and we take out liquidity on the buy side to enter shorts as a turtle soup, or you wait for a market structure break, sharp drop, displacement lower, and then use every fair value gap to short into the sell side liquidity and expect price to go into that at what time? 1:30 p.m. or after 1:30 p.m. Because the 1:30 p.m. that sets the stage, first of all, for the PM session start. At 1:30 p.m. the price is going to spool into a specific liquidity and or imbalance, and it's like 9:30 for the AM session, and that's like 1:30 p.m. for the PM session. And then you have your first 30 minutes of trading, and you can have your first presentation inside that range as well. And then you expect price to go into the sell side. And then we were trading above the SIBI, and yeah, it's best to wait for 1:30 p.m. now, and then we traded up into the buy side here. And that was the turning point of, we did trade into that, and you see how the bodies are not above that. It's just wicking into that because there's so much buy side liquidity resting. All the retail traders are basically trading this as a breakout. Why? Because they have seen this as support. Triple lows is support for them. So they are trading with stops, buy stops above this buy side liquidity pool, and then they hope that price is not going to break below these lows. So their stop loss is either below these lows in here or below the sell side liquidity down here, because they trust this as support. And now they want to see this be broken to the upside and then used as support. So resistance becomes support. And with these triple lows, retail trader thinks they are safe and they are on the right side. But their stop loss is here, and the market is only going to trade for liquidity and all imbalances. And that's why we trust in trading to these levels like these. 1 minute chart, you can see we did trade lower and left a displacement. And that's perfect. And you see the bodies are not above that. So this is just a purge and revert. And this was still inside the AM session. And we had a lot of time distortion right before that. So no long setups in here. You can see how there's no high probability long setup on the 1 minute. For me, I don't find any good long setups in here. You could have used this fair value gap with this mitigation block. But for me, it's not a good setup, to be honest. It's just, yeah, time distortion, and then goes quickly into the buy side liquidity. And the high probability setups were on the short side because we had our bias being bearish. And we see the sell side down here, right? Perfectly with the sell side down here. And then first sell side reached, inside, another macro. So this is not random. Why this macro? So basically we had this this consolidation here. Price ran higher and left the sell side inside that macro. And this sell side down here, inside the macro. Liquidity inside a macro is so fucking important. And you see inside this macro there was liquidity and it ran here and then dropped. And you see how the turning point was between these macros. Why? Because we had such a slow price action inside that macro. Price turned between these macros, took out the macro liquidity, and went into the next macro going for another liquidity pool. For example, this sell side liquidity, and then set up more liquidity coupled with the lows on the left inside that macro. Goes higher, consolidation, expansion between these macros, right? Because the liquidity inside the macro, that's really high probability. If you, for example, if you have a bearish bias and you see this orange line here, that's midnight opening price. Price goes above that again, so that's a premium. And we're trading inside the buy side liquidity and inside this gray box that is the opening range gap. Price drops with a displacement and this balanced price range pretty much between the macros. Why between the macros? Because the job on setting up liquidity inside this macro is done. The liquidity is there. Price has manipulation to the upside outside of a macro, turns outside of a macro. So the very next macro, if our bias is bearish, if we want to see lower prices, what should this macro do? And it's also approaching the lunch hour. So this is your first lunch hour macro that usually trades back into the range and or against the AM session bias. The AM session bias was pretty bullish. So it had a one lower here as a user swing up into the buy side. So this is your AM session bias basically, or AM session direction. So the macro here that is basically set up for trading against the AM session direction. And we have liquidity resting there with some Fairvalue gaps below that. That's perfect for finding a draw down into that inside that macro. And then this macro, because a macro is there to start a run into a specific liquidity and or imbalance. And yes, we turned outside of a macro, but this turn outside of a macro is really important because this buy side now is not inside a macro, right? So this turning point, this run on the buy side is not inside the macro. So this one should stay safe inside the next macro, right? So we see a drop into that here, 12 p.m. It drops into the sell side right inside this macro. So this macro starts its run into not only the sell side liquidity, but also the sell side below that. And we are approaching the lunch hour and then PM session 1:30 p.m. right? So yes, this macro started its run into the sell side. It does not have to complete its run inside the macro because we have 1:30 p.m. news. So this is still 90 minutes from this point. And now, if we go a little bit further, you see we had a 15-minute fair value gap right after taking out the buy side liquidity here, taking out the sell side here, and leaving the sell side down here. So this macro, you can see, it did trade into the sell side and then went into consolidation. And I used this inversion fair value gap, but we had no news yet. So we are still waiting for the news, and this would just simply range around, and then at 1:30 p.m. we just drop lower and go into the sell side liquidity. So news in 25 minutes, we were still waiting. And then I said, if I would make the market go lower slowly, then use 1:30 p.m. to take out the sell side liquidity and run into the Asia deviation of -2.5 and -3. So these orange lines in here. And voila, this was the setup. You can see that we ranged prior to the news, right? And we set up macro liquidity. So there was buy side resting inside that macro. We had this 15-minute SIBI, so it already ran into that with taking us out a lot of highs here, and we had this inversion fair value gap. And then we had such muddy price action in here, and we left this high and this high. So there's buy side liquidity, and this is where you can use your turtle soup setup here. Why is this safe? This high safe? Because it's outside of this macro. And the macro here, the buy side here, that is basically set up based on this macro. Yes, this buy side as well. So basically, if you wanna like point it to directly to this macro, yes, the buy side up here would have been your buy side, macro buy side. But what is really, really near to that macro? This buy side up here. So this one coupled with this one just after the macro. So there's buy side liquidity resting. Price goes into that and it disrespects this reclaim, sorry, this fair value gap in here. So this would have not been an entry because we left the equal highs. It trades into that. See this smaller fair value gap in here? I'm gonna show you that in a chart real quick. And then, as I drop soon, I recorded it, and then it dropped into our targets, and this minus 2.5 deviation, and everything to script. Everything was explained beforehand, and nothing was random, right? Not even the timing was random. 1:30 p.m. it was the point where price is going to or will trade down into the sell-side liquidity. And yeah, we had that. Was pretty nice to see that everything was as outlined. Yes, we wanted to see price go into the sell side initially here, but we adjusted. And if price goes to the upside, buy side liquidity, totally fine, totally fine. And you can see that this 5-minute CB, that was my last premium array for the AM session, you can see that this one is also reclaimed here on the 50-minute CB. And I'm going to show you that in the chart right now. Okay, so we are in the chart right now, and you can see this is all what we had for today. And my target was only this minus 2.5 or minus 3 standard deviation. Yes, it did trade even lower into that, but that range, I think we had, let me see, yeah, 100 handles. I think that's totally enough for making money and for you to trade inside these markets. You don't have to take out 300 handles or 500 handles. Stick to 20 to 60 handles intraday. And if you can find 80 or more, that's perfect. Like 80 handles for a setup, that's perfection. Everything above is bonus. You don't have to take 100 handles every single day. It's not needed. If you focus on the high probability setups, and if you find high probability setups on the seconds chart, and you're just in there for like few minutes, take out your 20, 30, 40 handles, and then just close your charts. That's perfectly fine. So we had the Asia session. You can see the deviation minus 1.5 here. I used that as finding a confluence with this new day opening gap, and we just turned inside the lower half, and that's perfect for finding bearish narrative. And you can see we did set up the sell side here. So I already explained everything. What I want to show you is if we go to the 5-minute, we are on a 5-minute, and I'm going to show you this fair value gap here. I said this one was the last premium array in the AM session before we ran into the buy side, and you can see how we disrespected that here. Used it as inversion on these candidates here, traded up into the buy side, and rejected. And you can see how this is now, we can delete this 50-minute. This is a reclaimed CB, because we did trade above that and then below that again. And this is your breaker. And basically this is your breaker because the body is lower than this one. So you use the breaker, this one. And that's inside this reclaimed CB. So it doesn't really matter if you find fair value gaps, breakers, order blocks as high probability, because what is your order block in this? Correct. This green candle coupled with this one. So these two up close candles, that's your order block, right? So you can put in this as an order block. It's not that hard. So you have order block, reclaimed CB, breaker, and it doesn't really matter what you see. If you see your narrative and if you trust price to go into the sell side liquidity, it doesn't really matter what you use. You can use breakers, you can use fair value gaps, you can use order blocks, you can even use mitigation blocks. It doesn't really matter. If you have experience and you do this every day and you trust your PD arrays, and I trust fair value gaps, especially coupled with breakers. I don't use order blocks that much. I don't care about order blocks. I use them for order flow, finding bullish order flow, bearish order flow, but I don't really use it for entries. I don't care. I just use fair value gaps and or breakers. And you can see how price did take out the buy side here. And what did I tell you about high probability breakers? If the run above, for example, a bearish breaker, if the one above this breaker does not only take out the high here on the breaker, it also takes out a specific buy side liquidity pool and then drops below this breaker. That's high probability, because the one did not only take out the breaker's high, but also a specific liquidity where price had a lot of buy side liquidity in this case, drop below this, and we can use that as a breaker and then find lower prices, because this now is a high probability breaker. If we just traded up into the buy side here, that would have been enough when we had no buy side up here. For example, if we trade up into this buy side, then reject below this breaker, that's also high probability. But only if this high on the right, in this example, this high would have been higher than the left one, because then we had no highs, equal highs up here. But the fact that we had equal highs up here, it trades into that. And if you see the opening range gap, here, that's your opening range gap. Everything below 50% is perfect in this scenario, because we had a really large gap, more than 120 handles, and you use your graded swing. You can see 25% would have been perfect scenario, but everything below 50 is good, because that's perfect for finding short opportunities if your gap is large like this one and you have still size liquidity open. Especially we had this in the electronic trading hours. If we look in the regular trading hours, you had the sell side down here. So you could have used this as a best case scenario. So I would have taken, I don't know, 200 more handles. So that would have been your 300 handle setup, but you don't need that. I was content with 100 handles, taking out the sell side in the electronic trading hours, because we also had this busy in here just below the sell side on the electronic trading hours, and this first presentation from previous Friday and the deviations. So that was my high probability target, and it can go lower than that. That's totally fine, and you can still find setups inside this. But our narrative and first target was the sell side liquidity, and you can make enough with that. You don't need to take this whole move in here. You don't need that. So we did trade below the 50%, took a buy side liquidity, had this market structure break with the breaker and everything outlined here. And then on the 1 minute, we had this sharp drop in here right after taking out the buy side liquidity here. Boom. This macro did set up the sell side liquidity. In between, we had this run into the buy side. So this one should stay safe as a intermediate term high, basically. Then it drops below this. On the 5 minute, we had the market structure break. This one would have been your very, very early short. You can do that, totally fine. Price goes into consolidation inside that macro, sets up buy side liquidity, takes that out, and it went into that, rejected, and I went short. And then 130. And you can see this can't be random. Isn't it like 1 minute before news, it takes out the highs? This can't be random. If you see that, and you know you can see that before it happens, there's definitely an algo. This cannot be random. Prove me wrong and tell me that this is random, because it's definitely not. And you can see that 1 minute prior to the news, it takes out the buy side liquidity and then just drops heavily. I don't know, but yeah, you cannot make this up. So, and it takes out the sell side liquidity here, this one on the electronic trading hours here. That was my first partial, and then the second one was at minus 2.5 standard deviation, and I was content with enough. Everything below is fine and is a study. So you can see this first presentation, price goes below that, leaves a fair value gap. What is this fair value gap? Measurement gap, right? Because we have a breakaway gap here, breakaway from this consolidation, breaks away. CB as a measurement gap from this high to this low, use it as a measurement from this high to another low, coupled with this first presentation, goes lower into another consolidation. Inside the macro, it goes into another consolidation, and then right after the macro, we had triple highs in here, leaving the sell side down here, and the same scenario. It goes lower and goes lower even into the first presentation from another day. I don't know from when, but then it reversed and went back up into this first presentation. So everything in here, the PM session is as a study. I won't review that here. That is for your study, and you can still find a lot of setups on this on the seconds chart. For example, in this case, let's go to the seconds chart in that case, 15. If you don't trust this as a turtle soup on the 1 minute chart here, well, that's fine. See this drop here and this fair value gap. That's your institutional order flow entry drill and breaker. High probability breaker, right? Because we not only take out the breakers high, but also buy some liquidity. So that's your high probability breaker. And if you don't trust breakers, if you don't trust CBs, and you somehow just trust the inversion fair value gaps, then use your inversion fair value gap. Trades here, away, trades below, and use it as inversion. So you can use many things, but one thing should be correct, and that is your bias and your narrative, or basically bias and narrative that goes one-handed. So, and then you can use simply every single PDOA, use order blocks, use fair value gaps, inversion fair value gaps, breakers. Doesn't really matter. If you go to the 5 seconds, for example, let's go to this example here, and you see there's another fair value gap leaving, right? Drops, then leaving a fair value gap here. Let's delete this one and this one. Takes up into this 1 minute inversion fair value gap here, and you can see on the 5 minute even we have this high and this high, relative equal highs. Takes that out. Once more above this high on the 5 seconds, drops heavily, displacement, fair value gap entry. Basically a 2022 model from ICT. Sell side was rated here with the market structure break on the 1 minute. Goes higher once more into this volume imbalance and this green candle as a bearish order block. This one can be used as a breaker because we have a high, basically this high, low, higher high, even though this run to the high as a higher high is really, really long compared to this one, but this is still a breaker, right? So you can use this as a breaker, and then it drops heavily, leaving another fair value gap, and did not even reach the sell side yet. So you can use this as a measurement gap. Why measurement gap? See this back and forth price action in here compared to this one, for example, or this one. This is a back and forth price action. It leaves the price action with a breakaway gap, measurement gap, and this is a 5 seconds. So you can use this measurement gap, for example, from this high to this low, right? And you take this to the measurement gap midpoint, and you see minus 2.5 deviation. You get the same idea, right? You can use different things and take out the same trade as I do, or ICT does. And then it goes into consolidation and then drops once more. So that's basically it for the for the market review here and trade review. I hope you liked it and you learned a lot in this. So yeah, I hope you find this insightful, and I wish you a great night, evening, day, whatever.